So you've probably clicked on this video because you saw my annoying face on the thumbnail and you thought I was going to teach you about trading 2 and 2 pies. Well, that's exactly what I'm going to do in this video. So if you're new to investing, this is the video for you. And in this video, I'm going to explain exactly what pies are, how to use them, and how you can actually set up monthly automated investments so that you never have to worry about it again. So as a beginner investor, you should know that there is no such thing as the perfect stock. And in order to prevent ourselves from losing everything, we don't tend to put all our money into just one company. So this is where trading 2 and 2 pies comes in, because it allows you to easily put all your investments into separate pies or even one pie and easily manage these and diversify them as much as you want to. Now before we start, let's get all the pie jokes out the way. 3.141415. But anyway, when we log into our trading 2 and 2 app, we have a section called investments where we can actually manually invest just as normal. I have a very popular video on a beginner's guide on how to invest straight from the beginning. This channel is about beginner investors, so I'm going to be very easy with you on this one. So we have the investment tab, but we also have the pies tab. Currently I am invested into one pie, but essentially pies are like the food pie. You can get one whole pie, but you'll probably cut different slices and allocate them differently based on how much you want to eat. Unless you're like me and like to eat a lot of pies, I would just have the whole thing. So trading 2 and 2 allows you to invest in pies in just the way that you want it to. However, users of trading 2 and 2 have created many of their own pies, so let's check out that first to get an idea of exactly what pies are. So if we open up the pie library, we can see a collection of pies created by the community, and each pie can have a different theme. For example, this pie called AI Future focuses on companies that are based on artificial intelligence. So this pie invests in 7 different companies. We have Microsoft, Intel, Alphabet, C3.ai, Nvidia, Alphabet again, and AMD. And as you can see, each company has a different percentage weighting as part of the overall pie. So essentially this pie contains 7 companies and they're not equally shared. So with your pie, you can create any amount of companies with any different size of pie. For example, here, realistically, you have 25% Google because Alphabet Class A and Class C are pretty much the same company. We have Microsoft at 20%, Intel at 20%, and then we have companies like AMD only at 10%. This is because the creator wanted the companies to be allocated like this. However, I must note that just because your companies are in a pie does not mean that the value of your investments cannot go down to 0. Essentially, if you only have 7 companies within the same sector, so for example, this is all within the technology sector, you put yourself at still a high risk of losing money if something happens to the technology sector. Like we do usually see during recessions, is that the technology companies don't do as well. So remember, most investing should only be for the long term. However, even within the short term, some of these companies may go down to 0. So the reason why you'd create a pie with different companies is because if one company actually goes bust, so for example, if C3.ai actually goes bust, you have the rest of the money in those other companies, which could either make your loss less painful, or companies like Microsoft could do 100%, giving you an overall profit, even though a company, for example, like C3.ai will be going down to 0 and going bankrupt. For example, I'm not saying it will do. And as you can see, trading 2 and 2 is very community based, with pies being able to be copied and shared in different platforms. So if you wanted to, you can copy this pie, for example. Also, we have pies that focus on specific things like paying out dividends. So for example, this pie here focuses on trying to give out a high dividend. As you can see by the description, 5 company pie with high average annual and high percentage of dividend. There's 6 companies which I've never heard of with exactly 20% slices. I must note this, it is very, very important to acknowledge this. Just because companies are part of a pie, again, does not mean that these companies can't go down to 0, or that just because they pay a high dividend, that they will continue to pay high dividend and they will continue to grow. A lot of the times, companies with high dividends, for example, this has a high dividend yield of 15%, could very soon actually stop paying their dividends. So please don't invest in companies just because you find them in a pie. Try to create your own pie, try to learn more about the world of investing. This is a focus on beginners, so we're not going to get into that in this video. We can see over here we have something called an annual rate of return, so AAR, so that's average annual return, and it says the pie's average annual return, so the weight average of the 5-year annualized return is 11.19%. So this number here, I must warn you straight away that this number here is almost random. So this number here is calculated by trading 2 and 2, and it is by no means accurate. In fact, I would say that it is almost a random number. Giving you 11.19% over 5 years at consistent 11% is almost very very unlikely. It is even higher than something like the S&P 500 historically, going back over 100 years. So definitely don't think this number is guaranteed. It is by no means guaranteed. In fact, most of the time you will actually see your returns being a whole lot less, and in some years maybe a whole lot higher. But on average, over 100 years, you're never going to see this realistically. So as we continue, we have more and more pies. As you can see, this pie has a lot more slices. It has 36 slices, and the focus of this pie is good stocks for long term. Again, please don't take your stock picking advice from these pies. Essentially, these are random people who are creating these pies, and no one knows where the future of the stock market is going to go, and definitely not a pie creator or a pie consumer. But anyway, some of these companies are dividend aristocrats, meaning that they've been paying out dividends consistently and increasing the amount paid by dividends for many years. For example, Coca-Cola, McDonald's, we have Starbucks. So potentially this could be a decent pie to invest in. But again, this is not financial advice, and do not take your stock picking advice from anyone on the internet that you do not wholeheartedly trust. So like I said before, I have been investing in one pie, and this is called the almost daily dividend pie. And this was popularized by a YouTuber called the Dividend Experiment. And essentially what this is a pie with 50 holdings of equal weighting, which focuses on mostly American companies. And because you're investing in 50 different companies, the plan is that you receive dividends nearly every single day, because each company usually pays out either twice a year or 4 times a year. By having 50 and spread out all over the year, the aim is that you receive dividends very, very regularly. So in total, I've received £5.94 from this pie. So I put in around £401 into this, as you can see, invested here. And I am happy with the amount of dividends I've received, so £5.94. But however, the value of the portfolio, so the value of the pie overall, has gone down by around 6%. Now, this isn't to say that the value is not going to go back up. I do think it will go back up, but it just goes to show that investing is never going to be a straight journey. However, making a pie or copying a pie gives you so much more power in your investing, and every investor is different. Every person's financial habits, every person's financial expectations is also going to be very, very different. So what is great about these pies is the fact that you have something called auto-reinvestment. So this is when dividends build up in the pie, you can reinvest these dividends back into some of the holdings automatically. So the amount that you can actually put back from your dividends does depend on how many slices are in the pie, because if you have too many slices, there's going to be a minimum amount that you can actually put in. So for example, this pie has 50 slices, so the minimum amount that you can actually reinvest in from your dividends is £50. So that's £1 per company. So currently I'm going to have to wait a very, very long time for this to fill up to £50 before it starts reinvesting back into the pie. However, most pies aren't full of 50 companies, and right now I'm going to show you how to create your own pie and how to automate everything so that you never have to log into Trading212 again. So in the pie menu, if you press plus next to open pie library, we get this menu. So build your pie, pick your favorite stocks and ETFs. They will appear as slices in the pie above. So here we can press add instruments, and we can actually put in the companies that we want to create this pie. So for the purposes of this video, I'm going to put one ETF and one random stock so that you don't think I'm actually giving any stock advice. So for ETFs, we're just going to go with the most popular, which is the Vanguard S&P 500. We're going to add this to the pie. So now we're going to go back and we're going to go to the stocks and find the most popular and just pick the first one. Let me warn you that you shouldn't just pick stocks because they're popular, but I'm going to do this just for the purpose of the video. I'm going to add Amazon to it, and then I'm going to add it to the pie. As you can see now at the bottom, we can see we have the VUSA and Amazon. We can press next. So next what we're going to do is allocate the slice size for each company or ETF. So as you can see, we can change the amounts that we want for the Vanguard S&P 500. If you're more cautious, you would put more maybe towards an ETF which is already diversified, and then we can put less for Amazon. Let's go with round numbers. So let's put 90% S&P 500, and then 10% will go into Amazon. Make sure these numbers add up to 100. It says your average annual return is 13.5%. Please don't take this for face value because it is most likely not going to be accurate at all. So now we have our two slices. What we can do if we really wanted to is add another company. Let's just do that for the sake of it. We're going to go into growth. Let's just go with Netflix, for example, add to the pie, press next. Now we have two companies and an ETF. It is important to remember that this ETF also includes these two in it as well, but for the purpose of this video, we're just going to leave it. Let's put a bit more Amazon, and then let's press next. So it actually doesn't auto 100% it. However, if you press this, you can proportionately redistribute all the slices to 100. Press confirm. As you can see, it does it automatically, and now we have 58% Vanguard S&P 500, 34% Amazon, 8% Netflix. And it is important to remember that the minimum investment is £12.50 in this pie. This is because of the minimum order values of the respective companies. We can press next. Now this is very important for those who have asked me how we can automatically invest instead of manually putting in money and manually picking our investments every month, we can go to Auto Invest. This sets up an investment schedule and automates your deposits. If you choose to do so, you can also do this manually, but if we go into Auto Invest, we press next. Now, changing these sliders does allow you to have a projection of what you can expect in the future. I would still say this is very unrealistic. For example, with an initial deposit of £1, £100 a month for 40 years gives you a projection of £965,000, which I think is very unrealistic. But anyway, most of us will probably want to invest at least £100 a month. Let's just leave this bar at however many years, because we can always change this later. We can actually schedule when we want the money from our account to go into these pies. So for example, if we want it monthly at the end of each month at the 28th, we can do that. We can do it every 2 months or every 6 months. Let's go with monthly at the end of each month. So 28th, just because February is the shortest month. Press update and then we'll press next. So now we get to name the pie, and honestly, you can name it whatever you want. So now we press next. And now we are ready to go. We have created a pie with an initial deposit of £1. The money will be deposited every month on the 28th. We have a duration of 20 years. We can always cancel this later on. We have a goal of 91,000, whatever that's worth. And there's a minimum investment of £12.50. We can press confirm. So in order to actually set up £100 a month, we can do this either via a credit or debit card, or actually the free cash we have in our Trading 212 account balance. So I wouldn't actually recommend linking credit or debit card. This is because after £2,000 of deposit, there is a 0.7% fee, which in the long term will add up to so much. So definitely do avoid that. What I would recommend is taking out of your free funds. So actually, in order for your free funds to be topped up £100 a month, what you would actually have to do is set up a standing order from your bank directly to your Trading 212 account. This means at the end of the month, maybe on the 27th, it will automatically, once the standing order is set up, transfer £100 from your bank account straight into your Trading 212 account balance. And then on the 28th of each month, the pie would then take out £100 from your balance straight into your pie in the allocated amounts that we have specified when creating the pies. So now that I've created my pies, I haven't actually invested any money into it because I'm going to delete it. This is just for testing purposes. But you also have the ability to reinvest the dividends back into the pie. Like I said before, this pie has a £12.50 minimum dividend deposit. So the dividends will have to pile up to £12.50 before they are automatically reinvested back into the pie. So also at any point after you've created the pies, you can actually change the amount that you want going forward to be put into the pie. So let's actually try to do that by going randomly again, pressing this, pressing confirm, and now as you can see, my allocation towards different companies is at different percentages, and I can just press confirm, and I've changed that going forward. So the pie is a great way to keep track of everything you've invested and see actually if you're on track or behind in your goals for saving specific amounts. But as a word of warning, don't take the amount projected by Trading 212 because it's almost guaranteed not to be that amount. So make sure to check out some of my other videos, and I will see you in the next video.